Welcome to the Capital News. I'm your host, Alex Karitis. Today is Thursday, February 11th, 2021. Thank you so much for joining me. The title of today's podcast, Economic Match Made in Hell. As we discussed yesterday, there is no separation now between our Treasury Department and the Federal Reserve. This is now a banana republic. I know I've been saying it here for a long time, but this is it. Now, a first world banana republic, whatever you want to call us. That's what we are. We are going to almost be directly monetizing the debt, which of course should never happen. Typically when we do this, there's a middleman in the way as part of the process, because the Federal Reserve isn't supposed to buy our debt outright. It has to be purchased from a middleman, your brokers, your dealers, okay? And that's still going to take place. But at the end of the day, it's still the same result. So what was shocking with what Jay Powell said yesterday was that the real unemployment rate is closer to 10%, as opposed to the official unemployment rate that we're told from the Bureau of Labor Statistics of 6.3%. That's a big difference. And the Federal Reserve rarely, if ever, challenges government data. In fact, if they challenge it, they say, oh, you know what? The reality is actually even better. It's even better. Typically, when they go after inflation, people say, well, isn't the real inflation rate much higher than what they say, what's stated? Oh, no, in fact, no, they're overstating it. They could calculate it differently, and it would be even better. It would be even lower. So now this raises the question. If the Federal Reserve is openly going to start questioning some official government statistics, well, then why shouldn't people ask the question, well, what about GDP? What about our trade deficits? What about inflation? If you're saying this one isn't right, then why aren't the other ones? This is opening the door. We know a couple weeks ago, following the FOMC meeting, when Jay Powell came out, we said he's trapped. And he knows he's trapped. And we said that when he made the comment when somebody asked him about asset prices, primarily the stock market. Well, look at what's taking place in the equities market. Isn't that a direct result of monetary policy? And he said, no. The recent run-up in asset prices is due to the fact that the markets are starting to price in further fiscal policy, i.e. this $1.9 trillion monstrosity, and also the rollout of the vaccines. Monetary policy has very little, if anything, to do with it, but that's not what he said previously, where they were taking credit for inflating this bubble. Now, of course, they don't call it a bubble, but that's what it is. You also have to understand the history of quantitative easing, which is what they're doing, which when it came out during the great financial crisis, we were told by the Federal Reserve that the reason they were doing that was to create a wealth effect, was to create an increase in prices, not value, but in prices, to financial assets, stocks, bonds, real estate, with the belief being that through this wealth effect, people who have these assets, and primarily, we know the stats on that. We know it's the upper echelons of the income brackets that hold the vast majority of these financial assets. Once they make profits due to this wealth effect, due to quantitative easing, well, then they'll take those profits and they'll reinvest them further in the economy, or they'll start spending those profits into the economy, lifting all boats. It's hogwash. It's BS. Doesn't work. On the margins, it's going to, of course. But broad strokes for an economy this size, not even close. So when you have a former chair of the Federal Reserve and now the Treasury Secretary, Janet Dingbat Yellen, with the current chair of the Federal Reserve, Jay Powell, working hand in glove now, this is just the first of many 1-2 punches that I have been discussing here since the election. Since we knew that Janet Yellen was getting the nod to be the Treasury Secretary. Now, it really doesn't make any difference. It was going to be the same case anyway. Just a question of what face was going to be put into the chair. It's not as if Steve Mnuchin and Jay Powell weren't buddy-buddy. They most definitely were. But this is just the tighter merger between our government and the Federal Reserve. And the Federal Reserve always wants to say, well, we're supposed to be independent. Politicians can't ask us, well, they can ask us questions, but they can't really challenge us. They can't overrule us. The president can't even overrule us. They can question, they can challenge here or there, but you're not going to do anything. You're not going to overrule our votes. If we want interest rates here, that's where the Fed fund rate's going to be. If we want to do this operation, we're going to do it. Nobody's going to stop us, which is completely against our Constitution and our system of government with checks and balances. And of course, these people are unelected, which makes it that much worse. So they weren't going to stop. So now you have the independence story kind of blown out of the water now. It was always a bunch of BS to begin with, but now there's no sunlight between Treasury and the Federal Reserve. The excuse that is being peddled, as we mentioned yesterday on our podcast, Fake Unemployment, is that we have to pass this $1.9 trillion monstrosity, because if we do, we'll get back to full employment by the end of next year, which is, again, more hogwash and BS. So that's what Janet Yellen was pushing for over the weekend. That's what Jay Powell was pushing for yesterday. And that's what they're going to continue to push. And of course, the story is going to be, well, don't you understand? Look at these two economic geniuses. Look at these economic titans who saved us from the great financial crisis, who saved us from an even worse fallout during the COVID-19 lockdown and recession. Clearly, we have to listen to these people. They saved us. And they're saying all we have to do is pass another $1.9 trillion that we don't have, by the way, and we'll be at full employment by the end of next year. No, it's not how it's going to happen. It's not going to work that way. But if you're against it, well, then you're against people getting their jobs back. This is what they continue to do. These are the games that they continue to play. So this was an economic match made in hell, no matter if Joe Biden was president or if Donald Trump regained the presidency. And it was Steve Mnuchin or some other Treasury Secretary that may have been nominated under the second Trump administration, had that been the case. So I just want you to understand, it doesn't make a difference. But now we have the Democrats in control of the government. They have the White House, they have the House, they have the Senate. So they're going to push some of their political capital through. This is what happens. This is politics. This is power. This is what's going to happen. The question is, how much are they going to be able to get through before there is real pushback? Republicans swept in 2016. They had political capital. They used it. Their policies screwed us over too. Doesn't matter. I'm trying to elevate you above the two-party system. Get over it. Get over being on Team Red or Team Blue. Doesn't matter. Look at the national debt, which I wanted to talk about yesterday, and we ran a little late. But I want to get this out of the way too. So we're now at $27.9 trillion. National debt, $27.9 trillion. The CBO came out with projections for our deficit this year. It's already going to be north of $2 trillion. North of $2 trillion as it stands today. This is not counting the $1.9 trillion monstrosity. This is not counting any other type of spending that they pass. Remember, in December, we passed Nobody Cares Act 2.0, $900 billion, and a spending bill for $1.4 trillion to keep the lights on, I think, through March. So they're going to have to pass another one of those, too. Then what about the Green New Deal? Then what about health care? What about infrastructure? So we're just getting started here, people. And we're already at a $2 trillion deficit. Deficit. Meaning we're spending $2 trillion more than what we bring in. We bring in $3.5 trillion through taxation. We're going to spend another $2 trillion on top of it, as it stands today. That's $5.5 trillion. We could build and rebuild again the greatest infrastructure the planet has ever seen with that type of money. But this is all, excuse my language, it's all going to be pissed away. And I say that because that's the best word to describe what's going to happen. You have to understand how much money that is. I don't think anybody can fully comprehend it because these numbers are astronomical. It's a 1 followed by 12 zeros. That's how big 1 trillion is. We're going to have nothing whatsoever to show for this. That's the travesty in all of this. There is nothing to show for it. People can't even argue that. You say, oh, well, we spent all this money, and look what we have as a result. We lost a few $1 trillion in GDP, so they said, well, we'll just make it up by printing it and throwing it into the system. That's not production. Gross domestic product, production. There's no production. There's money printing. If it was that simple, we wouldn't have the recession. We wouldn't have the problems. Doesn't work. They're buying time. So you get in our little time machine here for the U.S. debt clock. Fast forward 4 years from now, today, we'll be at $49.9 trillion. I wanted to mention this before we hit 50, because once we hit $50 trillion, I don't know what we're going to do. Are we going to have a little party? I think we're going to have to. Get a cake, something. We're going to have to do something. Pop champagne. I mean, $50 trillion in debt, that's a big mile mark. Everybody should be happy about that. And this is interesting. This is fascinating, too, because we started talking about the debt clock time machine maybe in December, November at the earliest of last year. And we were at maybe 48.2, 48.5 trillion at the most. And now 49.9, very close to 50 trillion. And who knows what's going to happen over the weekend? We might get there. It'll be here shortly. Make no mistake about it. So I just wanted to mention that to you as well. Yesterday, we didn't have time to cover the second day of Donald Trump's second impeachment. All I really want to say is it's a continuation of the discussion I had the other day, after the first day of the impeachment trial and hearings that were taking place. I think the Democrats are making a good case. There's no doubt in my mind that Donald Trump is at least partially responsible for what took place on January 6th. It could have been a completely different event if the man had just conceded, if the man had just said, okay, you know what, we have exhausted all avenues. We took it to state legislatures. We took it to the secretaries of state, of various states. We took it to state courts. We took it to federal courts. We exhausted every single avenue, and we just didn't win, ladies and gentlemen. And you know what? That happens, okay? That happens. We beat Hillary Clinton and the Democrats in 2016, and in 2020, Joe Biden and the Democrats beat us, okay? That's a story as old as our body politic here in the United States. All right? That's what happens. So you know what we have to do, ladies and gentlemen? We have to stay organized. We have to stay together. And here are the policies that we need to prioritize. We need to keep the momentum going. We need to keep our movement going. These are the politicians we need to support. These are the laws we need to pass, etc., etc. And what happened on January 6th would not have happened. But it did, because that's not what the president said. The president said, if I win, all's right in the universe. If I lose, it's rigged. And he said that before the election. And of course, he had to continue with it once it was declared that he lost and Joe Biden was the winner. And you have people across this country on both sides of the aisle that are desperate, that are frustrated, and rightly so, for a number of reasons. As I say here, 1,000,001 reasons to be upset and frustrated and disappointed in the system. So it doesn't take much to get people wound up and to vent and to try to hold somebody to account. And when you actually believe, now you might not, but people do out there, you have to understand this, the condition that they're in. Put yourself in their mindset, in their shoes. They hang on every word of the president. They trust him. They don't think he ever lies, which is ridiculous in and of itself, but there are people out there that think, he's the savior. And when he says this election was stolen from us, Our country is going to be destroyed because of the evil Democrats. This is our last chance. You have to fight for it. What do you think is going to happen? This ain't rocket science. And I just have to, again, we have to play the game because people are brainwashed in this country. We got to play the game. If this was Barack Obama who said those things and this was a result of these actions, of those words and rhetoric, and you're a Republican and you're fine with what Trump did and you think, okay, this impeachment is just blah, 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 blah. Would you be saying that if it was a Democrat, if it was Barack Obama and these actions happened? No, you wouldn't. Not for a second. Just reverse the whole thing. Reverse the whole thing. The whole Republican Congress, the whole Republican Senate, they'd all flip if it was a Democratic president. No ifs, ands, or buts about it. That's the hypocrisy. That's part of the problem. That's why you have to be above the two-party system, and you have to leave them immediately. Now, tomorrow, we're going to hear from President Trump's defense team, which is not going to have a defense at all. It's going to be about the hypocrisy. What about the Democrats saying bad things? What about Antifa? What about the Black Lives Matters protests and the vandalism that took place during the spring and summer of 2020? What happened there? Well, hey, two wrongs do not make a right. So anybody that did anything wrong, get them all. I said this during the first impeachment trial last year. Impeachment is not just about punishing somebody or holding somebody account for what they did. It's also about preventing that same type of action or a worse action or an escalation thereof from happening. And by that time, you should have seen who Donald Trump was as a person. And we saw what happened. That is forever going to be a stain and a mark on this country's history. Innocent people, for the most part, obviously they committed a crime, breaching this, that, but they're dead. They shouldn't be dead. That young woman who served in uniform for this country got shot in the neck and died. That never should have happened, and she never would have been there if it wasn't for Donald Trump saying, hey, everybody come to the Capitol, come to Washington, D.C. on January 6th. It's going to be wild. Oh, and it was. Oh, and it was. So I want him removed, and I want him barred from holding federal office again, because that's in the Constitution. That's why the founders put it in there, because they could foresee some character, and I don't care what party the guy's from, making these types of comments. And this is what happens. I told you, this is not the first time you've had these types of characters rise to power, and it's not going to be the last either. But he's got to go. Who's going to be held to account for all of this? Yes, the people who did breach the Capitol, those who did harm, those who did vandalize, they need to be held to account, and they are. And they are. And the sad thing is a lot of them thought they were just taking orders from President Trump, that they were doing the right thing, that nothing bad would happen to them. Well, now they're arrested by the FBI, and if they weren't in financial dire straits to begin with, now they're probably going to go bankrupt fighting the FBI and the federal government. So good job. Good job. The Republican Party, I've been done with them for so long. This is a disgrace. It disgusts me to no end. It really does. This is so easy to just put him down, put him away. You can't run again. That's it. He wants to go out and campaign for people. Well, he's still a free citizen. That's something different. Eliminate the opportunity. Because this type of rhetoric cannot stand. And I've been through the list of things to say, well, Alex, yeah, well, you don't like him. I understand. You don't like his style, but look at what he did. He didn't do anything. Okay? Didn't do anything. So you have no argument. So that's the impeachment. We'll hear what his defense has to say, though. And he's entitled to the defense. Of course he is. We have some market performance. The dollar index is at 90.5 on the dollar index. Not a lot of movement right now across the major currency pairs. Bitcoin is at $47,200 per coin. A mixed bag on Wall Street today, but mostly down, although the NASDAQ did hit a new all-time high. All in overnight futures trading are in the red, but relatively flat right now. Japanese cash trade is down about 0.3%, a mixed bag across the pond in Europe. Australian trade giving back about 0.75%. On the commodity front, a little bit of a pullback today. WTI at $57.85. Brent at $60.77. Natural gas, $2.84. Gold giving back a little bit, trading at $1,824 an ounce. Silver hanging on at $27.08 per ounce. And to round it out, Uncle Sam's 10-year junk note yielding 1.16%. So there you have it with some market performance. Let's get to initial jobless claims. For the week ending February 6th, seasonally adjusted claims come in at 793,000. That was higher than what the market was anticipating. 793,000 for the week ending February 6th. The week ending January 30th was revised upward by 33,000 and is now sitting at 812,000. So that's a sizable revision to the upside, and obviously that's in the wrong direction. On a non-seasonally adjusted basis for the week ending February 6th, comes in at 813,000. For the week ending January 30th, for continued claims on a seasonally adjusted basis, we're at 4.5 million, a week-over-week decline of 145,000. On a non-seasonally adjusted basis for the week ending January 30th, it comes in at 5 million, a week-over-week change of a minus 168,000. For the week ending February 6th, Pandemic Unemployment Assistance, PUA, came in at 334,000, a week-over-week decline of 34,000. Continued weekly claims amongst all programs, regular state, federal employees, newly discharged veterans, Pandemic Unemployment Assistance, Pandemic Emergency UC, extended benefits, state additional benefits, workshare gives us a grand total of 20.4 million. This is for the week ending January 23rd. Recall, for the grand total, it lags a couple of weeks. 20.4 million. A week-over-week increase of 2.6 million. The biggest decreases were with regular state, week-over-week decline of 32,000, and extended benefits, a decline of 49,000. The biggest gains were witnessed in PUA, gaining nearly 1.5 million, and PEUC gaining nearly 1.2 million. So this is something that was of concern to me last week, where that number stood at 17.8, and of course we were ticking up, and because of the time lag between Nobody Cares Act 1.0 and 2.0, it wasn't a smooth transition. I mean, these are government programs. Nothing runs on time. I mean, that's why they always say, well, it's close enough for government work, and that's what it was. So to see this type of volatility in these numbers is actually not that surprising, but it's still heartbreaking nonetheless. 20.4 million, okay? Now you take that number and you divide it by what the Department of Labor uses as the denominator of 142 million and change, you come up with 14.3%. 14.3%. Okay, as you could say, some sort of de facto unemployment rate. That's more than double the official rate at 6.3. That's 40% above what Jay Powell said the real unemployment rate is. It is closer to 10. Where do these people come up with these numbers? This is the reality of the situation. And it's terrible. Terrible. 793,000 on a seasonally adjusted basis. We're about 5 weeks away from this being 1 year since we saw our first major spike in initial jobless claims due to the lockdowns and restrictions associated with COVID-19. And we are still seeing these types of numbers. I might be able to put that into some perspective here momentarily, but I do want to get to the Fed's balance sheet and some other statistics. But that is just... I'm speechless. It's a tragedy of epic proportion. And one would think, with trillions and trillions and trillions of dollars thrown into the system, this would not be the case. They threw several $trillion into the system already, and we continue to see job market deterioration. So why do they think another $1.9 trillion is going to be the silver bullet? Oh, and by the way, they are going to throw that $15 minimum wage into it. And we were just told by the CBO that if that goes through, bye-bye 1.4 million jobs. Yes, over a certain time frame, but nonetheless. 1.4 million job losses. And it'll probably be worse than that. Federal Reserve's balance sheet hit a new all-time high, $7,442 billion. $7,442 billion. Again, an all-time high. Hit the previous all-time high back on January 20th. We're about $30 billion north of that figure. And we are going to go much, much higher. M1 money stock, well, we plateaued. I mean, this is almost no different than last week, which was an all-time high. 6.8 trillion in change, so still maintaining that all-time high. As far as I'm concerned, it's a rounding error, just a simple plateauing effect right now, and that too will continue to climb as we continue to pass more fiscal policy and is monetized by the Federal Reserve. That's what they're doing. With respect to M2 money stock, not an all-time high, but still flirting with it. 19 trillion 400 billion. 19 trillion 400 billion with respect to M2 money stock. Again, these numbers are staggering. They are historic, and they are going to break the bank. They're going to break the system. We're going to exhaust ourselves, and we're going to hit rock bottom, and that's it. And the question is, what are we going to learn from it? Is anybody going to take responsibility? Is there going to be any accountability? Or are they going to say, oh, well, something else, if we just had done this, if we just had passed one bill to authorize money that we don't have, everything would have been fine. Nonsense. Nonsense. So I hope you're prepared. I really, really do. Because this is only going to get worse from here. Well, a little bit of perspective, I guess we could say, with respect to initial jobless claims. I was curious to know what the grand total was of how many Americans since late March of last year, how many people filed an initial claim. 78,005,000. 78,005,000 Americans filed an initial jobless claim since the end of March of last year. Now, clearly, in those first couple of weeks, first couple of months, really, through March and April, we saw multi-million claims. Okay, several million claims coming through. So, if I was curious to say, okay, well, when did we sort of break the week over week, week by week, million threshold? So when were we below a million claims at a steady clip? Well, we have to go all the way to August. Okay, so March through August, we were seeing a million plus initial jobless claims. So come the end of August through where we are today, we started to see weekly claims under a million. Some of them were close to it, but it was still under a million. So if you go from the last week of August of last year to where we are today, that would be about 19.5 million Americans filing an initial jobless claim, which gives us a weekly average of about 816,000, which is right on point. It's where we've been fluctuating around. And there's no end in sight. There is no end in sight whatsoever. We have kicked the can down the road. So a lot of the things that were swept under the rug, that were put off, are going to have to be dealt with at some point. I would have to think a lot of it's going to be dealt with this year. I know they're trying like hell to kick the can further down the road. That's why they're pushing so hard for this $1.9 trillion monstrosity. That's why they're going to push so hard for infrastructure and something to do with healthcare and something to do with green energy or the environment. There's no ifs, ands, or buts about it. And they're just going to say, well, we print money, we spend money, GDP goes up. But there's no real production underneath it. Nothing to support it, nothing to sustain it. That's the problem. That's why your food prices are going up. That's why your utility bill is going up. That's why your transportation costs are going to go up. That's why housing prices are at all-time highs. That's why equity prices are at all-time highs on price, on valuation, one metric after the next. This is not going to end well. Can they continue to push it? Of course they can. Of course they can. I don't have a crystal ball. But this is just a crime of epic biblical proportions. And the correction is going to be epic and of biblical proportions. Some other things we'll discuss, long-term unemployed, those unemployed 27 weeks or more. We'll have that discussion perhaps tomorrow or next week. There's a lot we have to discuss with these numbers, diving in a little bit deeper, providing context and perspective, because we're just blowing the great financial crisis out of the water. And that was one of the worst episodes, really, in recorded economic history. And we're not done with this stuff yet. There are still restrictions. There are still lockdowns. There are zombie corporations that are being propped up and created, saturating future growth and prosperity. We've robbed ourselves blind so we can have some numbers look better than they otherwise would have been. It's a disaster. And it's the result of an economic match made in hell. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Kreitis. Godspeed.